first question coming from Judith in Deep Gap, North Carolina. She writes in, I'm not completely happy with my credit score of 692.
I added 100 points to my credit score in less than 1 month. Then it dropped over 100 points, and I brought it back up 120 points to prove that you can change your credit score with little effort, and it just got way easier to do this.
Well, I was shopping for a new car. Which one's me? A cool convertible or an SUV? Too bad I didn't know my credit was whack, cause now I'm driving off the lot in a used subcompact. F-R-E-E, that spells free. Creditreport.com, baby. Saw their ads on my TV. Thought about going but was too lazy. Now instead of looking fly and rolling fat, my legs are sticking to the vinyl and my posse's getting laughed at. F-R-E-E, that spells free. Creditreport.com, baby. Offer applies with enrollment and triple advantage.
This video is all about credit scores and the credit system, and it's important because that's how you do things like get a credit card, make big purchases like if you're buying a car, or even bigger than that, a house. And most people, you're going to need to use the credit system to do this because this is just how everything has been set up. So first, you got to know what a credit score is. So a credit score is a number designed to represent how likely you are to repay a lender on time. So if a lender gives you money, the credit score determines how likely they think you are to repay them on time. And so just one thing to note is that the higher the score means the more likely they think you are to pay them back on time. And so that means you can get a higher credit limit. So let's take a look at a high credit score. So if you have a high credit score, it means two things. First thing is that you're going to get lower interest rates on loans and credit. So when it comes to credit, you always want a lower interest rate. The second thing is that it means a higher amount of money you can borrow on a credit card or loan. So it means you can also get a larger amount of money to borrow. So those are two things with a high credit score. Now let's take a look at a low credit score. So if you have a low credit score, it also means two things. So the first thing is going to be the opposite. It's actually going to mean higher interest rates on loans and credit. So if you have a low credit score, that means you're going to have to pay back at a higher interest rate. Second thing is it usually means a lower amount of money you can borrow on a credit card or a loan. So they're opposite. So if you have a high credit score, you're going to get a lot of money and low interest rate. A low credit score means you're going to have a high interest rate and a lower amount of money to borrow. So typically the credit system runs off this credit score range, and this is usually, if you go online, this is about the standard range for credit scores, and it looks like this. So starting off with poor, and so this is ranging from 350 to 579, and the lowest possible credit score you can get is a 350. And so if you're in this range, especially towards the lower end near 350, pretty much the only thing you can do is you can get a credit card with a low amount of credit limit. But if you move up and you move into the 580s, low 600s, and then even up towards the high 600s, then you can get larger amounts of money, and your interest rate will still be decently high at this level, but you can get enough money to buy a car and even a house, but your house would be quite a high interest rate at this level. Moving on to the good range, which is 670 to 739, here is where you can buy a house with a solid interest rate if you are in this range right here. And then you move on to very good, and this is where you can get very high limit credit cards. So you can get a very large line of credit card. You can buy a house. You can buy a car. You can pretty much get loans at low interest rates for anything at this level. And then when you move on to this excellent level, which is 800 to 850, this is where you can make very, very large purchases. You can buy mansions, all this. So that's if you have very, very high credit level. So let's look at how do you get a good start on your credit. So you have to start building this at some point. So when you're older, you can end up in this range instead of the lower end. And again, it's all about how you start off. And so there's some easy ways that you can start off on the right track. So the first is get a starter credit card with a low credit limit. Second thing you do is then make sure you pay off your credit card bills on time. And the third thing in the same category is don't let your credit card balance build up. That's really going to hurt your credit score if that just keeps building because it's showing that you're not paying your bills. And then finally, ask for a credit report so you know what your score is. And we're going to end on this last note about credit reports because legally you are entitled to this. So as part of the Fair Credit Reporting Act, also known as FCRA, the three main credit reporting companies, which are Equifax, Experian, and TransUnion, are required to provide you with your credit report, and this is a key here, at your request. So they're not just going to send it to you. You actually have to request it, but legally they are entitled to give it to you free of charge every 12 months. So if you ever need to check your credit score, legally you are entitled to a free one every 12 months or once a year. And so again, just a note is that this is a very good way to monitor your credit score so you have an idea of where you're at. So if you want to go buy a car or even make a bigger purchase like a house, and they tell you you have a bad credit score, so you're going to have a very high loan amount, you're not shocked by it. So again, it's good to know this stuff early. So that covers pretty much everything on the basics of credit scores and credit reports and the credit system. And as always, how I end it, have a nice day.